888-965-7987. Paid for by Term Direct.
Did you know that 55% of working Americans would choose a lower-paying job to work under a leader who inspires their brilliance? In today's fast-paced world, resilience isn't just a trait, it's a superpower. If you're feeling overwhelmed by life's pace with hurry and worry, struggling to find a way, discover the secret with Simon T. Bailey's bestseller, Resilience at Work: How to Coach Yourself into a Thriving Future. Get your copy today on Amazon and unlock your full potential.
For nearly 2,000 severely injured veterans, everyday life has become filled with barriers. So we build specially adapted homes at Homes for Our Troops. And thanks to our donors and supporters, this life-changing gift of freedom is provided mortgage-free to these veterans. But we need you to join us too in completing this important mission. Please visit hfotusa.org and help build homes and rebuild lives.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month. It is titled Trusts in Your Financial Plan. Mike, when you look at the big reasons that someone might want to undertake trust planning and how that dovetails with financial planning, what are the big items that come up for a lot of people?
Yeah, for most common reasons, there's four that I think about. One, in certain states and across the country, there's an estate tax, and so there's trusts that can help you mitigate the cost of that estate tax for future generations. There's trusts that can allow you to do sorts of bloodline planning. Maybe you have minor children and you're worried about passing away young. You can have trusts that are set up to deal with that situation. You have trusts that can avoid probate. And then the fourth one is sometimes a trust that might help deal with creditor protection. Sometimes a nursing home would be one of those creditors.
When we talk about financial planning, generally we're talking about things such as budgeting or investment allocations and things like that, and making that work to get you the money when you want it. How do you view trusts as fitting into that as well?
Well, it's one of those boxes that you need to check, and it goes along with other estate planning documents like a will, like a healthcare proxy. But important for most people, especially those in New England, to at least have the conversation around trusts and whether or not it fits into their strategy.
The guide, again, is titled Trusts in Your Financial Plan, and it is available for you to request at no cost. All you have to do is call 800-393-4001. The title, again, is Trusts in Your Financial Plan, and the way to request the guide is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Monday here on the Financial Exchange. Chuck, Mike, and Tucker with you, and we've got a pretty darn significant rally taking place across all major U.S. equity markets on the back of the announcement earlier this morning by, I think it was Scott Bessent and his counterpart with China, who originally had it during the 9 a.m. Geneva time press conference that they put out, that tariff rates between the U.S. and China are coming down significantly, effective immediately. Big thing that we're seeing, each side stepping their tariff rate down by 115%, which I know sounds like it's above the theoretical maximum, but it's the percentage charged on goods that they're coming down by. So the U.S. reduced its tariff rate on imports from China from 145%, which was a de facto embargo, down to 30%. China, in turn, reduced its tariff rate from 125% down to 10%, with both sides agreeing to a 90-day pause and further talks before taking any additional action.
So I think some context is helpful for how investors and analysts were thinking about these talks going into this weekend. On Friday, we talked a little bit about it. The, I would say, kind of forecast out there ranged anywhere from, hey, these could land in the 50 to 80% range when these talks are over, if there's some negotiation done. And the conversation we were having was, well, what if it's extreme to the other direction instead?
We talked about this. We said, look, that you have to, consider possibilities outside of what the market is pricing in. On the downside, it was, hey, what happens if they storm out of the room and there's no progress and you're still at 145%? And on the upside, I think we said, look, the best case scenario is probably getting to 20%, which was where they were before April 2nd. So when you say, look, we ended up at 30%, it's pretty darn close to the best case scenario that we were discussing. We said, look, we're not sure that this is particularly likely, but you have to consider that this could happen. And sure enough, that's what you ended up seeing here. So I think when we talk about this, I'm less concerned with like what actually went on during the negotiations, just because I don't think it's particularly relevant or useful.
I also don't think we'll ever know. So
no, speculating on how did this? Who cares? I think the important thing is, look, what is the actual impact to the U.S. economy at this point, and where do things go from here? And I got to tell you, there's a lot of meat that we can discuss in here. So, first piece, obviously you go from 145% where companies are like, no, we can't ship anything. Like that's kind of ludicrous for us to even consider doing this. So you go from there down to a 30% tariff rate, which from talking with people who, again, are, importers of stuff from China, they say, yeah, it's not going to be as comfortable as, where things were before, 0 and then up to 10 and then up to 20%. But, okay, I can figure out how to run a business with tariffs at 30%, even if my margins are impacted.
Yeah, let's give this an example here, because, again, I think these get framed incorrectly in terms of how they actually work. Very infrequently are we actually individually, you and I, buying products from China to be shipped directly from there to us. Usually Correct. It is through an intermediary who's buying supplies to either finish manufacturing in the United States or, build a finished product in China that they stock on shelves here in the U.S. So you've talked about a lot your friend with the board game company, and I'm just going to assume that his board games cost $50 and $21
to make.
What board game costs $50?
$21 to make.
Yeah,
really? 50. Wow.
So I got
because I mean, we're not talking about Monopoly. We're talking about like board games and games that people are passionate about, and they're small, kind of niche games. So I'm assuming they retail for what, like 50, 60?
No, so he is a higher end board game manufacturer.
Okay.
So we're talking stuff that is low triple digits.
Got it. Okay. So sells for 100, cost 20 to make, let's call it.
Yes.
So previously, that tariff rate was bringing the cost to manufacture in the 50 to 60 range?
Yes. And by the way, I because I have numbers from him on, like, we went around and shopped this around. He was like, look, if I wanted to make it in the United States, it'd be $93 for me to make it in the U.S.
Got it.
And that's before handling any of, the shipping, the selling, to yada, there would be no profit for me if I were to do that. Likewise, at $20, and you take that up to a $60 production cost, again, think about most companies. Their margins are not 80, 90%. Margins usually are somewhere in the 5 to 15% range for most companies that are selling goods.
Right.
So in his case, it was basically like, look, I'm going to go from making, 10% on these to losing 20 to 30% on every item that I sell.
Right.
With a tariff at 30%, it's still probably, assuming that he eats all of the cost, which he's not going to, still eats through probably somewhere in the ballpark of 60 to 70% of his profit.
Right.
When it's all said and done, his profit will be reduced by somewhere around 20 to 30% as a result of this.
Yeah, and again, so if your cost to manufacture is $20, you're bringing that up to $27 once you include the tariff, passing along $7 a price increase to a game that costs $120, let's call it. That's, even if you're just passing along half of it, it's something, but it is probably not detrimental to the buyer.
So this is something where you look at this and you say, okay, so these importers of goods from China are going to, if they're still, alive, because again, there are some companies that didn't plan, or didn't have the wherewithal to be able to even stomach, a 4 to 5 week situation like this. So you have some that might have gone out of business, I don't know how many. I don't know, exactly which ones. But the ones that are around will say, okay, we're going to spool our factories back up. We're going to get things loaded onto ships, and we're going to get, everything moving. Now, you've got the additional costs that you've got to pay because of the tariff. That's part one. Part two, remember, a lot of people paused factory production in China at the outset of this. When you start those productions back up, A, probably not going to be back up to full speed right away. B, you better believe that all of those, big old container ships that, used to be coming from China have since been rerouted to, okay, there's more imports coming from Vietnam and Thailand, so great, now we got to get these ships back to China so they can bring the stuff, and there's a lot more coming because companies are going to want to front-run tariffs. The people that I've talked to are saying that freight rates are expected to go up anywhere from 50 to 150% depending on the route and exactly how much demand comes through. So where you land with this is, yeah, you're still going to see some sporadic disruptions of different goods and things like that probably roll through the course of the summer and into the fall and maybe even early winter. It's like any time that you have a situation like this, you're not going to have anything right back to how it was. Any of those catastrophic situations are taken off the table here. But the stuff that's going to be coming back in now has a bunch of additional cost that's attached to it. So the way that you deal with that is either you eat it yourself, you pass it on to consumers, probably some combination in both cases. What does that do to corporate margins, and then what does it do to inflation, and how do those things impact the U.S. economy? You know, those are kind of the next thing that we worry about now. It's not because this is like all doom and gloom, but these are real things that we're going to be seeing and having to deal with right now. They're real costs that are being borne either by companies or by end buyers of their goods.
So as happened on April 9th, which was the rollback of what was April 2nd again? It was Liberation Day. It was the rollback of Liberation Day, or at least a significant portion of it. This seems to be a rollback of one of the worst-case scenarios for U.S.-China trade, as well as trade for some other countries. And that's kind of where I want to dig in a little bit, is we seem to have, we now have set a 90-day tariff rate for the United States and China. I want to talk a little bit about that context and what it might mean for trade and developments with other countries whom with we are going to negotiate over the course of the next 90 days, because China's unlikely to be the last announcement on this front. So quick break and tackle that next here on the Financial Exchange.
Market volatility is at its highest point since the pandemic. Keep it here for the most comprehensive coverage of the global trade war. This is the Financial Exchange Radio Network. The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, two of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating the right estate plan to help secure your future takes effort. Cushing & Dolan are experts in estate planning. Their new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn how to make the right decisions to always protect your assets while avoiding costly mistakes, any one of which could have a dramatic and damaging effect on your financial strategy. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Don't take chances with the assets you've worked so hard to attain. Cushing & Dolan's new guide will help you address issues like this, so call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by Margaritaville Resort Cape Cod in Hyannis. Looking for a great vacation spot? Well, look no further than Margaritaville Resort Cape Cod. Located just off Route 6, Margaritaville Resort Cape Cod is perfect for a weekend getaway or fun-filled family vacation. You'll enjoy first-class accommodations and dining, our incredible Fins Up water park, and of course the gorgeous pageantry of the Cape. Visit MargaritavilleResortsCapeCod.com for reservations and more information.
Mike, when we talk about the step down in tariffs between the U.S. and China that was announced this morning, you had some other kind of surrounding topics that you wanted to touch on as well.
Yeah, I guess I just wonder how this frames future conversations that are had with other countries. I certainly think in some of the easier to negotiate countries, even those with a significant trade imbalance with the United States, it's tough for me to envision a scenario where the rate of tariffs goes above 30% now for, say, India or Vietnam or Japan. I mean, maybe I'm misreading the situation, but if we've gotten to this 30% level with China, it's difficult for me to envision a scenario where countries other than like Iran or North Korea that we don't trade with anyway have tariff rates that are substantially higher.
Well, I think this is it's one where you could probably see whatever happens with China as the ceiling. I think the question is, where is that ceiling? Like, is there a compelling case that it's lower? Quite honestly, there is, based on what Scott Besson said today, which is, hey, like we're seeing, some progress on fentanyl, and obviously 20% of this 30% that's there is specifically that the U.S. is singled out because of fentanyl. You could see a case where the U.S. has, the same tariff rate on China as the U.K. 3 months from now, 6 months from now, or something along those lines. I'm not saying that's right or wrong or that I agree with it. I'm just laying out the possibility because... yeah. Again, you have to consider the range of possibilities is all that I'm saying. On the other side of things, the April 2nd originally announced tariff rate would have taken tariffs on China up to 54%. Is that still a possibility if things go badly? Sure. So I think there's a range of kind of where that maximum is. But this gets back to something that I said on April 3rd, immediately after, which is, look, this is not the end of tariff uncertainty.
No.
It's the beginning. And right now, this is a continuation of that simply because I don't think there is any sense in my mind that we have seen the final numbers for any country simply because I don't know that there are any final numbers, Mike.
I'm pretty close to comfortable that we've reached the final numbers with the UK.
I'm not. I think they could go lower.
Yeah.
If you want, if you right now said, hey, for countries X, Y, and Z, where do you think these can go over the next year? I think the UK can go lower. I think Vietnam can go lower. I think Malaysia, Thailand can go lower. I think the EU could go higher. I think China could go either higher or lower. There's a wide range. Like, you go through country by country, and I don't think we are at the final number anywhere because I don't think there is a final number.
Yeah, it's a constant negotiation.
And this gets to my I think where I've landed on this, which is, hey, if that is the case, then until you get to something that is not country by country, but instead sector by sector, I don't think you are going to be seeing anything in terms of a meaningful shift to producing stuff back in the U.S.
Agreed there. You're not going to build a giant auto facility right now, even because
you have no idea what
tariffs.
You're going to wait for more clarity.
Yeah, there's no incentive to do that here.
And by the way, it's also been clear that even in those key areas, those are even open for negotiation. See what happened with the auto parts piece of auto tariffs,
right,
and how that was pushed back and could be delayed further. So,
in fact, in the very short term, you're going to see what might be considered the exact opposite of manufacturing in the United States, because if you are Chuck's friend who makes board games, or if you are any business at all right now, you this morning at 7 a.m. sent a bunch of notices to your Chinese suppliers saying, load up those boats as fast as you possibly can.
Yes.
I want this stuff in the country. I want more. I want triple my order. I'm borrowing money from the bank to be able to triple my order, or from whoever I can, in order to get this stuff into the United States in the next 90 days, pay the tariff that I know is going to be 30%. And again, why is that the opposite of manufacturing in the United States? Well, because you are, again, not even considering moving that elsewhere. You're not considering moving it to India, Mexico, Vietnam right now. You are purely saying, buy me the rest of this year's supplies of this stuff, whatever I can afford and whatever I think I can sell.
And give me a chance to think through what I want to do next.
Yeah, and get it all into the U.S.
So I think where I'm landing on this, quite honestly, in terms of, again, you listen to what people say, and I think that's informative too, but I always say, look, pay attention to what people do. The piece that is apparent right now is that this is something that the Trump administration wants to do as a revenue raiser. I think that's pretty clear. And here's the thing, Mike. If they don't, then let's ask kind of the big question, what is the point? Because here's the thing. The tariffs have not been in place long enough to do anything from a reshoring perspective.
Yep.
The step down in China was bigger than people thought, which to me at least suggests, hey, they don't want they don't want some kind of more direct confrontation with China. I'm not even saying militarily, even economically. Sure. Like you could have easily gone down to 50% or 54, where wherever you wanted to there. The rest of the reciprocal tariff rates are still paused for another 60 days at this point. And so if it's not about raising revenue, what is it about?
So I think that might be the optimistic view that, hey, this is the goal, which is to raise revenue to offset taxes. And I think that most certainly from a investor perspective, that's one of the better case scenarios you can have out of all of this. I think, ideally from the stock market perspective, you just want the free trade. But if the tariff revenue as a goal to offset tax decreases is one of the end goals here, then that looks pretty attractive from a market perspective. The pessimistic viewpoint would be there's a vast difference of opinion within the White House as to what the end goals are here, and they're just reacting kind of week to week to what markets tell them. And that would be a concerning avenue if that were what's going on here. And frankly, there's a little bit of evidence of that. On April 9th, the evidence was not that the Trump administration had a big change of heart. The evidence was that bond investors forced them to change their policy very rapidly. And the read that I had was, okay, well, did anyone think of this ahead of time? And the answer was seemingly no.
So I think this is why, again, trying to pay attention to, hey, what is in place and what does it say about where they want to go? The piece that's still intact is, hey, they want to raise some revenue. They've come out repeatedly saying, look, the 10% global baseline tariff is going to be in place, and we're not changing that. That's the baseline from which you have to negotiate on. the piece that I think is challenging then is, okay, like if you view China, and personally I do, as kind of the country with the worst trade offenses out there.
Yeah.
If 30% is the theoretical maximum, that's a pretty narrow range that you're giving yourself on anything, in the future. Let's take a quick break. When we come back, we've got Wall Street Watch after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans in their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death, so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Stocks are surging this morning after the U.S. and China agreed to substantial tariff cuts for 90 days after constructive talks in Switzerland over the weekend. Treasury Secretary Scott Bessent also said he expects to meet with Chinese officials again in the coming weeks to get rolling on a more fulsome agreement. At the moment, the Dow's up by over 2% or 889 points. S&P 500 up 2.3% or 134 points. And the NASDAQ now up 3.2% or 574 points. Russell 2000 is up 3.4%. 10-year Treasury yield up by 6 basis points, now at 4.43%. And crude oil is up 3% today, trading just below $63 a barrel. Big tech sector rallying today on the heels of this tariff news. Amazon, which sells many Chinese-made products, up by 7%. Tesla up by 5%. And chipmaker NVIDIA up by over 3%. Apple also seeing gains today, up over 5%. Separately, the Wall Street Journal is reporting that the iPhone maker is weighing price increases for its fall lineup, a step it is seeking to couple with new features and design changes. The report adds that Apple is determined to avoid any scenario in which it appears to attribute price increases to tariffs on goods from China, where most devices are assembled. Meanwhile, retailers also seeing big gains on the heels of the tariff news. Restoration Hardware up 17%. Best Buy up 7% higher. Five Below up 19%, and Home Depot trading 3% higher. Elsewhere, several drug makers seeing attention today after President Trump yesterday said he will sign an executive order today that would reduce prescription drug costs almost immediately by 30 to 80% to match prices paid by several other countries. Eli Lilly and Johnson & Johnson down by about 0.25%, while Pfizer is actually up by 2%. And shares of Kindly MD rocketing over 450% after the healthcare company announced a merger with Nakamoto Holdings, a Bitcoin investment company founded by David Bailey, a key cryptocurrency advisor to President Trump. I'm Tucker Sylvan. That's Wall Street Watch.
Anything else we want to talk about as it relates to the U.S.-China step down in tariffs?
It's going to make its way into the theme of the show all day today. So, but no, I don't think I have any other major takeaways. There's going to be a rush to goods from China. There's going to be really busy ports, really busy container ships, all coming into the U.S. at the same time. It'd be interesting, actually. I bet we're probably going to see some of what we saw during COVID. Remember when there were all those ships hanging out in the ports of Seattle and L.A. and all of those places waiting to get unloaded? We're probably going to see that. How long does it take for those ships to move? 45 days.
Well,
across
here's the thing.
Pacific?
So remember, a lot of these factories in China have been shut down to this point. You got to spool them back up, which probably takes a week or two.
Yeah. But there are some ships there are some containers that were ready to leave port.
There might not be ships there, though. That's the thing.
Yeah.
Like the ships are sitting there saying, if you are Maersk, who is one of the 5 companies that basically carries like 90% of all goods around the world, you're sitting there and you're like, okay, I got this boat that carries 2,000 containers. Am I going to have it sit in Shanghai waiting for containers that may or may not be loaded? No, I'm going to send it to Thailand and pick up something, in the interim. Now, the problem is the interim becomes, okay, I sent the boat to Thailand. It takes 3 days to get there. Then I got to load it for a few days. Then it goes over to the U.S. for 20 days, comes back 20 more. Right. So it's like it's 50 days before that boat gets back to Shanghai.
Yep.
So like this is the problem that you end up with. And this is why you kind of sit here and you look out at, what's coming and you go, oh my goodness, there's going to be so much stuff that is coming in. If you are because here's the thing. If you are a company right now, like there's two different ways that you can look at this, by the way, and I think we'll see like both of these in different respects. On one hand, you go, I need to get everything I can right now because who knows where these will go. On the other, you sit there and you go, you know what? I waited 30 days and they lowered the tariff rate from 145 to 30. Maybe I'll wait out the 90 and it'll go down to 10. It's a risk. I'm not saying it isn't.
Yeah.
But like you can see the thinking on it.
You can. Has there been any announcement on those who paid the 145?
No refunding.
Interesting.
Now, there weren't that many because it was basically like the last week or so that you had, a smattering of ships that were coming through that way. So there weren't that many. But in any case, like you're just going to see a ton of demand for transportation services for anything related to stuff coming from China. Now, here's the other thing. Again, just kind of like thinking through this. Let's say that I'm Vietnam. I know that I can't be a country, but let's say that I am a senior government official from Vietnam because
that makes more sense.
I don't know how my mountains would feel, because of this. But what I do know is, hey, if I'm Vietnam and I see, okay, so you had 1 weekend of talks with China and you reduced their tariff rate by effectively like 80%, from almost 150 down to 30. I'm sitting here and I go, what are you going to do for me? I'm sitting here at 10 right now as Vietnam.
Yeah.
You told me I was going to be at, I forget what the Vietnamese tariff rate was. I believe it was like north. It was
47 or something.
It was somewhere
like that.
around like 45 or 50.
Yeah.
And I sit there and I go, okay, so like what can I negotiate? Where are you? You've got Lutnick saying the lowest I can get to is 10, which is where I am. I was at like 40 and change or 50 and change somewhere in there. What am I trying to negotiate here?
Right. Especially in the context of, one of the theories of how you could negotiate good trade deals with the likes of Vietnam would be, hey, make them choose.
Right.
Who do you want to be a partner with, the U.S. or China? This new deal that you've announced is not going to be paired with a bunch of...
Why do I have to choose?
Yeah. This is not going to be paired with a bunch of tough negotiations with Japan, Vietnam, Malaysia saying, hey, either stop routing orders, stop doing all the stuff you're doing to support China, or you're going to face massive tariffs. Like, no, we are working towards reconciliation with China as part of this deal. So therefore, I don't think that any of those are going to be faced with some tough stance on China.
So I think that becomes something that's complicated. But the other piece that I think is interesting on this piece in the Bloomberg, that's what they call it. U.S. retailers are facing post-tariff spending disorder. Okay, let me think about like what that is. And the subheadline is where they kind of start to get into it. The trade agreement between the U.S. and China is good news, but American consumers are likely to remain hesitant.
So can we talk about what we think we saw when it came to hesitant consumers? Because I can only point to like maybe 3 areas of hesitation on the part of consumers.
Yeah, the places that we saw it were in travel-related stuff.
So hotels and airlines.
Yep.
And fast food restaurants.
Yes, those are 2 things. Was there a third? Oh, hotels, airlines, and fast food.
Yeah, those were my 3.
Other than that, like auto sales,
good.
Up. No meaningful shift in trend for things like electronics or home improvement supplies or stuff like that.
Nicer restaurants, fine.
Some of them. Others, like you got into like that mid-range and like Chipotle and those guys were struggling.
Sure.
Starbucks was struggling, but they've been struggling. So like who knows if it's anything unique to this.
Starbucks tariffs, yeah. That was the problem.
So, I mean,
exactly. Like, Starbucks has been in a black hole of suck for like 5 years now, so I don't think you can really tie anything to it.
So I severely doubt that tariffs led to people consuming less fast food.
Correct.
There's just no path
There's
there.
no line that you can draw between the two. What you can say, and this is reasonable, hey, the lower end consumer is completely tapped out, but that's not a tariff related thing.
Right. Could you make an argument that tariffs and the market reaction to them was affecting travel on airlines, hotels, Airbnbs, and Verbos? I would argue yes.
Yes.
I think especially when you talk about foreign travel into the United States, when you're looking at bookings of Airbnbs and Verbos from Canadian citizens, for example, that's pretty clearly signaled the downturn. I don't think this is going to reverse that. But on the other hand...
The stories about Canadians boycotting U.S. goods was before all of this.
Yes. Chinese visitors to the U.S. are not a massive tourism block that we are usually concerned about. The other stuff that we were seeing on that end, I just don't know that this is what reverses it. I mean, certainly I think if you are a business owner who is pulling back on corporate travel, maybe you greenlight it now after these announcements, but Europeans aren't going to be suddenly more excited to come back to the United States. I don't know where this ultimately drives any of those items.
I think this gets me to kind of where I am with the economic data the next few months right now. I have no idea what the heck we're going to see. First, again, the subheadline here, the trade agreement between the U.S. and China is good news, but American consumers likely to remain hesitant. Even if they were hesitant, I don't know that they would remain hesitant. I don't know that that's even a fact that you have in evidence.
I think you'll start to see fewer pulled guidance.
Why?
I think basically that company... so here's what will happen.
How can you have fewer pulled guidances when we have 2 sets of 90-day windows that we have to get through?
Because
now?
I think you'll basically give guidance saying, well, if we assume the tariffs stay where they are now, then this is our guidance. The guidance might not be terribly useful, but it'll be better than companies saying we don't have any guidance.
Maybe. I mean, what? Here's the thing. If you've already pulled it, you're going to put it back in? What's the upside to you?
Yeah.
Like, if you've already pulled your guidance, what's the upside now to putting it back in? There is none. Like, the only thing that can happen, if you're right, okay, great, you're right anyways, and your stock will, do what it does. If you're wrong, why would people trust your guidance again?
Yeah.
So, I don't know. I kind of look at it, and again, I just view the next few months, we're going to have data that's all over the place. You're going to have some things that are showing massive spikes in activity. You're going to have some things, again, people loaded up on cars before all these tariffs. By the way, the 25% imported auto tariffs, still in effect.
Yep.
So, and those are stacked, by the way. So here's the funny thing. You buy a car, you buy a BMW right now that's not made in the U.S., which are most of their sedans because it's just not economically feasible to do that here. You buy a BMW 5 Series right now, you're paying a higher tariff rate than you are on a sweatshirt from China.
Likewise, you buy a Land Rover or Jaguar from the UK, you're facing a lower tariff than if you buy a Ford from Canada.
So there's all kinds of weird stuff right now, and this is why I say the data is going to be all kinds of weird. You're going to have some things that look like they're going through the roof for the next couple of months, and things like auto sales that have been pulled forward. What happened? Would anyone be surprised if auto sales decline at a 5 or 6% seasonally adjusted rate? No, because they're just reversing what they did the last couple months.
Markets last peaked in February. Let's take a quick break. I want to talk about some context in terms of where markets are right now because big daily swing, obviously, on the China-U.S. trade news. We'll cover markets next here on the Financial Exchange.
The global trade war is in full swing. How long will it last is anyone's guess. Keep it here for the most up-to-date information plus breaking news every day, right here on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Margaritaville Resort Cape Cod is perfect for your next New England vacation. Located just off Route 6 in Hyannis, the resort has everything you need to enjoy an incredible week with your family or a quick weekend getaway. Along with first-class accommodations and food, Fins Up Water Park is packed with aquatic adventures that will keep the kids entertained for hours. The summer season is coming soon, so make plans today for a fun-filled vacation at Margaritaville Resort Cape Cod. For more information and to book your trip, visit MargaritavilleResortsCapeCod.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and are consistently voted one of the top Caribbean vacation destinations. Enjoy world-class cuisine, pristine beaches, rich history, and a vibrant nightlife. Book your trip now to visit America's Caribbean paradise, the United States Virgin Islands. For reservations and more information, go to visitusvi.com. That's visitusvi.com.
Chuck, we were talking a little bit before about just markets and contextualizing where we have gone so far this year. So S&P 500 is basically now flat for the year. We started January 2nd at 58.70.
Not just flat for the year. It's flat since the election.
Flat since the election now? Okay.
We are in the election, the gap between the day of the election and the day after.
The high for markets was reached February 19th. We're a couple percentage points off of that all-time high.
More than a couple. We're about 5.
Okay, yeah, so five percentage points off of that all-time high reached in mid-February. And there's a number of different ways to read that. I tend to think that the recession risk is still higher than it was on Election Day. Markets, again, taking an optimistic viewpoint here of where tariffs go, where tax rates go, presumably, and a whole slew of number of different things. But for some context, that's where things have gone. Obviously, at their worst, we were off about 20% on the market downturn on the S&P 500. And so What worries me is the same thing that I've been talking about for a while, which is the average retail investor with this type of whiplash historically has gotten pretty badly hurt because they tend to react a lot faster. They tend to sell when news is bad, buy when news is good. And if you're finding yourself, I guess, in that position of second-guessing your own moves today, which everybody is. I don't think most people thought that tariff rates were going to come down to 30% on China. But if you are second-guessing your moves when it comes to your portfolio, please give the folks at Armstrong Advisory Group a call at 800-393-4001. Let us provide a little bit of context to how we manage money here at Armstrong, how we manage clients' expectations, as well as their overall financial plan. That number, once again, for the Armstrong Advisory Group, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's see. Do we want to talk about Apple?
Sure. Tim Cook's got to be pretty happy today.
Especially because in the Wall Street Journal, with an exclusive, Apple is weighing price increases for its fall iPhone lineup, but not blaming tariffs for doing so.
Okay.
Interesting
mix that you're going to have to, thread the needle there on, Timmy. But how are you going to do it?
Well, and here's the thing. This is what it comes back to. Companies either have to eat these tariffs or they got to pass on price increases or some combination of both.
Well, and furthermore, I don't think that Apple is now subject to 30% tariffs.
So they're not on the smartphones, but there are still things that they have to import. There still is stuff that they have to bring in from China. If they're making stuff somewhere else, they might still have to bring in, rare earths from China to make, this, whatever it might be. So, and look, moving production to India is not free. You can't just...
Nope.
You don't just say, hey, let me take this production over here and move it over here. You're not playing a video game. There's actual costs of doing so.
That said, I can't think of anyone outside the administration that I would guess has a better direct line and educated guess on where tariffs will land for a number of different countries than Tim Cook at Apple right now.
No, he's
the number one connected person outside of those working in the White House.
He might even be more connected than people working in the White House.
Many of them, yeah, quite possibly.
Tim Cook, we talk about, remember, Tim Cook was Apple's COO for, maybe 10, 15 years before he took over for Steve Jobs after he passed?
Yeah.
When we talk about logistics, and specifically the logistics and operations of running a major tech manufacturer, boils down to one thing. How close of a relationship do you have with the Chinese government? I'm not saying that's good or bad. I'm just saying that's what it is. And the amount of sway that someone like Tim Cook has and the amount of information he gathers is second to none, in my opinion. Let's take a quick break here. We got hour 2 coming up in just a little bit.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit GoRedForWomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Margaritaville Resort Cape Cod is perfect for your next New England vacation. Located just off Route 6 in Hyannis, the resort has everything you need to enjoy an incredible week with your family or a quick weekend getaway. Along with first-class accommodations and food, Fins Up Water Park is packed with aquatic adventures that will keep the kids entertained for hours. The summer season is coming soon, so make plans today for a fun-filled vacation at Margaritaville Resort Cape Cod. For more information and to book your trip, visit MargaritavilleResortsCapeCod.com.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Trusts in Your Financial Plan. Mike, a lot of times when we talk about financial planning, it's with the idea of having your money available to you to use when you need to use it. How do trusts work to kind of keep that idea going, not just for yourself, but also for the next generation as well?
Sure, and it doesn't always need to be the next generation, because how many times have you heard somebody say, hey, look, I raised my kids, they're in a good spot, I want the less check I write to bounce. I'm spending this money. But, there can be situations where trust can benefit even a married couple in the event of a lawsuit or a nursing home that's unexpected, especially if there's a big age gap. That can be critical. But for next generation planning, it gets much more common, and especially in the New England area where most states have an estate tax, there's a lot that can be done from a multi-generational planning perspective to, if not eliminate those taxes, at least mitigate them to a large degree. I mean, you think about here in New England, the value of your primary residence, which you sell, it might not be subject to capital gains tax, but if you die, is most certainly subject to estate taxes. There's a lot that can be done in the way of trust planning.
Our guide this month is titled Trusts in Your Financial Plan, and you can request it by calling 800-393-4001. Again, that number is 800-393-4001, and the guide this month is titled Trusts in Your Financial Plan and details a number of ideas about how you can fit trusts into your financial plan.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking off hour 2 of the Financial Exchange is Chuck, Mike, and Tucker with you, and we got a big rally taking place across U.S. equity markets with the Dow up 990 pointeroonies. The S&P 500's up 148, and the NASDAQ... No.
Oh. Got it.
Just 148. And the NASDAQ is up 612 points right now. So about a 2.5 to 3.5% gain across major U.S. equity indices. We've got the 10-year Treasury selling off a bit, up 6.4 basis points to 4.439%. Mortgage rates likely to follow. And so Mortgage News Daily on Friday, the close for the national average of the 30-year fixed rate mortgage was 6.89, probably getting up to around 6.95, somewhere in that range today on the 30-year fixed rate mortgage. When we take a look at commodities, oil up about 2.5%, $1.50 a barrel on West Texas Intermediate to $62.52. We've got the AAA national average for gas prices still in the range at which I will not actually comment on it because it just has not been moving enough over the last couple months. So, it's somewhere between 310 and 320, but I'm not going to tell you exactly where because, well, the point of it was to not take the time to do it, so I think I should just stop doing that, huh?
Instead of talking about not doing it?
I kind of like talking about not doing it, though.
Yeah, I get it.
It's I just want people to know that oil isn't going anywhere. It's not going up or down, or rather gas prices are not. It's just kind of hanging out there. And we've got gold selling off $103.60 an ounce to $32.40 and 40 cents.
Other news other than the news of negotiation of tariffs with China include President Trump's press conference this morning and executive action this morning on drug prices, which attempts to, I guess, clarify most favored nation status with a number of drug producers attempting to bring down the price of those drugs sold in the United States. He mentioned specifically some of the weight loss drugs, although how did he describe them?
I gotta say, this is one of my my favorite new quotes now. The weight loss drugs were described as, quote, the fat shot drug.
Like it. The healthcare sector as a whole was down in early trading, but is now up about 2%. And in fact, even those companies that were specifically called out, Novo Nordisk, who makes, I can never keep straight which ones they make, but they're up about 0.5% in early trading, and Eli Lilly up nearly 3% in early trading so far. So clearly investors not too concerned about what this might mean for them.
The analysis that I've seen there is that the most likely action is that
they raise prices everywhere else.
So basically, it's pretty much going, like, let's say that you are healthcare, drug manufacturer X. You say, okay, look, we have, what we think is, the profits that we're going to have for this year. Do you simply say, okay, we're going to accept, a huge cut in our sales numbers? No, we're not going to do that. Instead, you go to country A and say, hey, you are, by far the cheapest country out there. We need to raise prices by 400%. Otherwise, we're not going to be able to sell here anymore. And so, yes, prices in the U.S. Again, this is all if this even – I haven't seen any of the text. I do know that back in 2020, President Trump tried to do this same thing, and it got rejected by a couple of different courts and so never ended up going into effect. But – this is something where, assuming it would even, pass muster with courts, which I don't know because A, I'm not a lawyer, and B, I haven't seen the text. I don't know why I need to see the text because I'm not a lawyer, so who cares? But if it were to be able to go into effect, all you would see is companies saying, fine, we're going to raise prices elsewhere. We'll take a little bit of a hit on our U.S. price, but prices go up elsewhere. And by the way, if they do go up elsewhere, the availability just ends up going down there because people can't afford to pay those higher prices anyways.
So we have those two pieces of news. We are continuing to get commentary from the administration on what all of this means with China, because I think there are many that are just still left scratching our heads here. But Scott Bessent has been quoted as saying that the U.S. is still seeking a strategic decoupling from China. You have President Trump saying we're looking at a complete reset with China. And look, what we do know is that for the next 90 days, the rate of tariffs on Chinese-made goods coming into the U.S. is likely to stick right around 30% or lower. I think that's all you can really say relatively definitively right now. And I'd also, I guess, be willing to say that you are unlikely to see any country that we do normal trade with facing a tariff rate above 30% over the next 90 days. And so that's kind of the new baseline, which is pretty different than what we were looking at Friday of last week.
Yeah. Let's talk a little bit about this piece from Barron's. It's titled, "We Were Wrong About Inflation for Years. Fixing It Requires New Thinking." And it's from a guy by the name of Mark Blythe, who is an economist and has studied this stuff for a while. And basically he makes the point, and it's one that I've made quite a bit, so I appreciate Mark listening to our show.
Of course.
He probably doesn't, quite honestly. He's smarter than us. But it's a point that I've made quite a bit, which is, look, the reason for globalization was not just because companies wanted to hire a bunch of people in China or Malaysia or Mexico.
Right. They wanted to do it because it was cheaper.
Correct. The promise of globalization was, hey, we can make stuff more cheaply. In turn, the standard of living will rise in those countries and allow the United States to sell more stuff into those as well. Now, the problem is that we kind of broke like the whole distributional aspect of this, and that, when you move that production overseas, we didn't do a good job of taking care of the people that were left behind here when those factories left.
Yeah, I'd say that's one of the problems. I think another one was that I think there was a vision that this would all get distributed all across the globe. Many different countries would specialize in different areas, and what actually happened is it pretty much all went to China because of their policies and demographics policies and just how they structured things. A lot of it ended up in China. But, yeah, those were two of the, I think, unforeseen side effects.
So what Mark brings up is something, again, that we've talked about quite a bit, which is, look, if globalization was one of the reasons why costs could come down, and it probably a big contributor to the lack of meaningful inflation in the 90s, 2000s, 2010s, that 30-year period, reversing it, or, even not reversing it, but just moving from, one country to another in order to move stuff out of, a country that may be more hostile to U.S. interests, is likely to put some upward pressure on inflation. And how do we deal with that?
Yeah. I don't know how that's significantly different than how we were thinking about it previously. The 1970s, when you think about that inflationary period, it was a supply shock and monetary problem that existed for a good decade and a half. And again, maybe the different way of thinking about it is everybody's been waiting for the supply shock of an oil crisis or something along those lines, and that's clearly not happening anymore. But supply shocks take many different forms, and yeah, if it's a deglobalization supply shock, that might have the same effect.
So I think overall, the place that I continue to get to is, hey, the inflation that we saw in 2021 and 22 is unlikely to repeat itself unless there's any kind of, similar crisis that we see, which is just unlikely.
Yeah.
It just is. But we may need to be prepared for some structurally higher inflation for the next decade or two. And what I mean by that is, hey, even during the period that I mentioned, the 90s, 2000s, and 2010s, if you go and actually pull up the data on U.S. CPI and say, okay, let me look at this from the start of January of 1990. Is that a good starting point?
That would be great.
And let's look at it through 12/31 of 2019. If you go and say, okay, what's the average inflation that we saw during that time? It was 2.46%. 2.46.
Not nothing.
So even during that great period where we said, hey, inflation wasn't a problem, it still averaged almost 2.5. Now, it was skewed higher by period surrounding the Gulf War, where it touched north of 6, and also in the run-up to the housing crisis blowing up. I don't know if people remember. Do you guys remember when oil went to almost 150 a barrel in the summer of 08?
Yeah.
It was, I was in college at the time, and
everyone was like,
the beer companies were raising prices on cases of beer left and right. It was like every week there was another like 30-cent upcharge.
Hybrids were the new hot ticket.
People were getting rid of their Hummers and getting into the hybrids and stuff. So it was skewed up by those. But the counterpoint is, okay, post-tech bubble period, inflation was down in the 1.5 range. After the financial bubble burst and the financial crisis happened, you had inflation running negative 2%. No one was like, hey, great deflation. It was, oh my goodness, there's deflation because no one can afford to buy anything because there's no money left.
Mm-hmm.
So I think that in looking at this, where I land is, hey, we probably need to be prepared for, I don't know, if we have, a 20th anniversary show of this show in 2045, which we obviously should, like on May 12th of 45, we should anniversarize this show. I bet we're probably sitting there saying, yeah, inflation in the United States for that 20-year period was probably close to like 3.25% to 3.5%.
Sure.
Then 2.5%.
It seems difficult to find a scenario where it is lower than the 2.5% that we experienced during peak globalization.
Yeah. And by the way, like I leave open the door for it could be higher than that, but it would seem to me that the reason I say probably not, I think the Fed would still have, a tough time stomaching inflation sitting there at 4.5%, 5%, just because, quite honestly, the answer as to why inflation is bad, it's not that inflation is inherently bad in any way. It just makes us upset.
It's destabilizing.
It just makes us upset, and that in turn makes us upset typically at whoever's in charge. And so basically governing regimes of any particular country or state or city don't like high inflation because it makes their constituents upset.
Mm-hmm.
Let's take a quick break here. When we come back, we've got trivia right after this.
Tariff fever is in high gear. We've got the latest on what might be next and how long it might last. Only here on the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts in Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. Creating the right estate plan to help secure your future takes effort. Cushing & Dolan are experts in estate planning. Their new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn how to make the right decisions to always protect your assets while avoiding costly mistakes, any one of which could have a dramatic and damaging effect on your financial strategy. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Don't take chances with the assets you've worked so hard to attain. Cushing & Dolan's new guide will help you address issues like this, so call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and you can register right now for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston. Time for trivia here on the Financial Exchange, and today is Homer Simpson's 69th birthday. On a Season 4 episode of The Simpsons, viewers get a look at Homer's birthday, which states it to be May 12, 1956. Homer Simpson has been so influential on American culture, his catchphrase has been added to the Oxford English Dictionary. So, trivia question today: what is Homer Simpson's catchphrase? Once again, what is Homer Simpson's catchphrase? Be the ninth person today to text us at 617-362-1385 with the correct answer, and you win a brand new Financial Exchange Show t-shirt. Once again, the ninth correct response to text us at 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Piece from Bloomberg: summer of travel, not for most Americans. U.S. airlines and hotels are bearing the brunt of Trump's trade policies and declining consumer confidence.
Not buying it.
Talk me through it.
So they quote a few different places here. One would be Future Partners, who polled 4,000 Americans every month on their travel habits. They found that sentiment towards vacation hasn't fallen off, but some consumers were starting to adapt their plans. More thrifty behavior showing up at Booking Holdings, where they said some American consumers at the lower end of the market were taking shorter vacations. On the other hand, you go to higher star-rated hotels, all-inclusive places, they are not seeing their bookings falling off at all. So what I suspect we will see this year is some travel companies struggling because of foreign travelers not coming. I think there will be some people that rent places on the coast of Maine, on the Cape and Islands, who are seeing less demand than they saw last year, and I think that part is real. Will we notice anything in terms of the spending of American travelers that are planning vacations for this summer? I've just been hoodwinked too many times by consumers telling me that they are pulling back and really taking a good, hard look at their spending and then not at all doing so. So I'm not buying it.
I think you have to look at this from the perspective. Mark Fandetti says this a lot. Look, if you want the best predictor of where the economy is going to be next month, look at what the data showed from the previous month. And there's an awful lot of momentum, both good and bad, that gets built up in economies. And so it takes a lot to overcome that. I think that when you look at what the U.S. economy has been through in the last 60 days, it's been a significant shock, but it still is something where there's so much positive momentum that until the data starts to actually show you, hey, there's something different that's happening, I think you have to kind of take every opinion survey with a grain of salt. And it's not to say that this won't develop into something that's bigger or that you won't see, pullback in travel plans eventually. But to this point, it still is mostly on the margins that we're talking about this. Yep. And while that can be enough to shift the trajectory of the U.S. economy from, growing at 2.5% to 1.5%, is it enough to, generate a recession, which is really where travel stocks would feel it? Yeah. I'm not sure.
And I do believe, look, I am 100% there that there are a bunch of consumers, especially on the lower income side of things, who, with a combination of inflation over the last few years, student loans starting back up, just any number of things have contributed to car prices, contributing to the real struggle that segment is going through, and you're seeing it maybe showing up in fast food demand. Those people weren't booking the all-inclusive vacation at Hyatt in the first place, and it's not going to be the thing that brings down overall travel demand.
Yeah, I think that's fair.
Again, I don't love saying that, but that's the reality. Is that segment, the bottom quartile, let's call it, of income consumers, are not the ones that are driving massive amounts of travel spending.
Yeah, I think that's fair. So I think where we stand on all of this stuff, there's another piece here. Americans embrace road trips as economic fears discourage flying. We're going to have to just take some time for this to all play out. Yeah. I'm open to a wide range of possibilities here because, again, we've never really seen anything quite like this before.
I do think airlines will struggle, but I just don't think it's because of American consumers.
The question is going to be, do these industries struggle enough to the point where they start laying people off in meaningful numbers that then affects the broader economy in ways that are not currently priced into the stock market? Because here's what I will tell you, and this is even before today's big move up. As of last Friday, the S&P 500 was trading 20.5 times forward earnings. After today, you're going to be around 21 times forward earnings. It's not a recession not recessionary.
No.
Okay, especially with, you look at the growth rates that are still priced in order to get there, and not year to date, but for calendar year 2025, analysts still projecting 9.3% earnings growth for 26, 13.5%. If a recession materializes, all this goes out the window, but right now, stocks are saying, no, it's not going to happen. Do you believe them? That's the bigger question. Quick break. We got the trivia answer next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
A solid financial plan has many layers, and trusts are often a core piece. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Understanding the various kinds of trusts that exist can be extremely beneficial to your strategy. If you're retired or nearing retirement age, a trust may help you with a wide range of issues, such as asset protection, tax efficiency, and avoiding probate. Call us today at 800-393-4001 and ask for our new guide called Trusts and Your Financial Plan. We'll discuss a number of different trusts and the areas in which they may help and how to determine which one may be right for you. Even if you already have a trust in place, this guide can provide a description of certain issues that may arise and could help you decide if changes are needed. Call us today at 800-393-4001 and get your guide today, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? Simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Well, in honor of Homer Simpson's 69th birthday being today, we asked the trivia question, what is Homer Simpson's catchphrase? Well, that would, of course, be... Dough! Yes, dough. Winner today of the Financial Exchange Show t-shirt was Joe from North Andover, Mass, taking home a brand new Financial Exchange Show t-shirt. Congrats to Joe. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
The spring housing sales season is shaping up to be a dud. That is the piece from the Wall Street Journal. And it matches what we are seeing in data that's coming out, which is pretty much, hey, for most of this year, you've been running about 3% under 2024 levels of activity. You had a brief period in April where things picked up a little, and then they've, kind of gotten back to not being great. And the problem is that the spring housing season basically is peaking right now.
Yep.
And then you have a slow decline in activity levels until Halloween, where it promptly falls off the cliff and slows down dramatically for the last 2 months of the year because no one wants to be trying to buy a place while you're planning Thanksgiving dinner and, Christmas Eve and stuff like that.
Man, were I in the market to move to Florida right now, I'd be one happy camper.
So here's the thing. This is all very much regionalized in that, well, here's the thing. You might say you'd be a happy camper trying to move to Florida, except that your insurance costs are through the roof now. Your property taxes are moving up.
Yep.
Your condo fees are nuts. And you might have, special one-off condo assessments and stuff like that.
Agreed. I would just be lowballing the hell out of the Florida market right now
Yes.
were I trying to move there.
Yes.
I would just be going from place to place. Okay, set me a 5 square mile place that I want to live, and I'm just going to submit offer after offer that are 30% below the list price and see what happens.
You think you got your place listed for $400? Here's $280. Take it or leave it. And
it reminds me of when I first bought my first ever home that I lived in was a 2-bed condo in Somerville that I purchased in 2011.
Yeah.
Half of the properties were bank owned, and it was just take your pick of kind of rundown places, but places that were just having to cut prices left, right, and center. And that is very obviously not what we're getting anywhere here in the Northeast. But you go to Florida, It's not bank-owned stuff. It's all privately owned stuff. It's just people that are pretty desperate to sell.
This is the thing. There's no stress in the housing market from a lending perspective. Like you're not seeing.
Explain what that means.
What
stress
I mean,
from
like
lending,
you're not seeing any kind of major, uptick in delinquencies.
No.
You're not seeing any kind of foreclosure wave or anything like that going on. So it's not that. It's not people can't make the payments on their homes. It's just, hey, if you want to sell a home in an area that was hot in the last few years, namely Florida and Texas, but starting to expand throughout the Southeast, you're not finding it particularly easy to do so in a lot of cases. Now, nationally, inventory levels at this point have gotten to the point that we're up 33% year over year and only about 16% below 2019 levels of inventory.
Okay, so, yeah.
And we're closing the gap by about 0.5% a week. We're probably going to be back to pre-pandemic levels of inventory by the end of this year nationally, but it's going to be horribly skewed.
Yep.
In the Northeast, where our show's based out of, you're still, in general, aside from Connecticut, running about 45 to 70% of pre-pandemic inventory.
There are other states that are similar, by the way. Illinois,
Yes.
I was taking a look at, similar story. Parts of the Midwest are in a similar position that we are here. But California, across the West, you're seeing inventory levels that are about the national average, which are still below 2019 levels.
If you go down and look at most of Florida right now, inventory levels are anywhere from 5 to 15% above 2019 levels. Prices, likewise, have fallen in Florida in most areas year over year. Not a ton, but you're talking low to mid single digits. If you go to Austin, Texas, prices are about 15% off their peak already, and inventory is running 25% above 2019 levels. And this is spreading. It's not going to be the proximate cause of any downturn. But what I will tell you, the housing market is getting to the point where in the next several years, in large parts of the country, I fear that it may be irreparably broken.
I don't know what that means.
I mean that the prices in a lot of the country are not going to be supported by the fundamentals of what people can afford based on where insurance rates are going, where tax rates are going, and what is needed in order to actually support the services provided to those areas. I can't make the math work, Mike.
Yeah, look, we brought up that condo.
The other place
that I was
where I can't
talking
make it
about.
work, this is not just housing. I can't make it work for cars.
Yeah.
I cannot make the math work for cars because of where insurance rates are going. I don't know how. I don't know how to make the numbers work. And again, this is not a economy falls off the cliff thing. It's much more, hey, when you go to sell that place that you've owned for 10 years and you have enough equity in, you're not going to get what you thought you were going to get for it. And I think that problem is going to get worse. And it's not related to the economy in like economic activity terms. It's related to the fact that there just is not enough income to cover the insurance and maintenance costs of what is needed now.
I need to think that through a little bit more.
That's kind of where I'm landing.
I'm with you that
Yeah.
insurance costs are going to continue to go through the roof. I don't think there's any path other than upwards or subsidized for insurance costs, and subsidies would be a stupid idea.
Right, it doesn't fix the problem.
Yeah, but I'm not ruling it out only because that's what we do for flood insurance, for example. We just say, well, we'll socialize it. So I'm with you that insurance costs need to go further up would be my guess. But I also would think that markets kind of solve that problem with prices coming down on properties further.
That's what I'm saying. That's the mechanism, unfortunately.
Right.
Is prices coming down further.
Yeah.
It's not that like homes won't be for sale. They just won't be for sale at the prices that you want them to be for sale for if you're a seller. That's where I think we're going.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently two of their beaches, Trunk Bay in St. John and Megan's Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI is everything you need to make memories that will last a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Rest of year isn't looking good for retail property market. I have no insight into this and whether or not it's anything useful or not to talk about.
Yeah, and it was written at 5:30 a.m. this morning, which I know this is silly to bring up, but
a lot's changed since then.
A lot's changed in the last, 6 hours?
Yeah.
I would have totally bought on Friday afternoon the idea that a bunch of Five Below and dollar stores were going to go out of business and close up shop or dramatically reduce their footprint. I'm no longer so sure about that.
Yeah. I don't think anyone knows anything right now.
The outlook for retail, I think we might have gotten past the worst of this stuff. Like, it's been a pretty ugly time period for shopping mall retail for a decade. We've been closing spaces. We've been converting them to other things. And I don't know. If we are not facing tariffs of 145% on every Chinese-made good, I think that a number of these places might be just fine.
Maybe not. I have no idea. I know that's not what anyone wants to hear, but I have no clue. The history of economic data in the U.S. says, yeah, this stuff should be fine, but I have no idea.
Yeah. I mean, it's still very much true that the square footage per capita in the United States of retail space is I think double the closest country, which is Canada. So the way that we shop here,
we just love buying stuff.
Yeah, and even with online shopping, this has not really shrunk much. And so, again, you could make a compelling case that compared to the rest of the world, but the U.S. has always just had more space and larger homes and larger apparent retail shopping centers.
Let's take a quick break here. When we come back, it's time for a little bit of Stack Roulette.
Tariffs fears continue to grip markets. Get the latest straight from Wall Street right here on the Financial Exchange Radio Network. Margaritaville Resort Cape Cod is perfect for your next New England vacation. Located just off Route 6 in Hyannis, the resort has everything you need to enjoy an incredible week with your family or a quick weekend getaway. Along with first-class accommodations and food, Fins Up Water Park is packed with aquatic adventures that will keep the kids entertained for hours. The summer season is coming soon, so make plans today for a fun-filled vacation at Margaritaville Resort Cape Cod. For more information and to book your trip, visit MargaritavilleResortsCapeCod.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
All right, Mike, what do you got for me for Stack Roulette?
Elizabeth Holmes' partner has a...
Business partner?
Both.
Oh.
Billy Evans, who has 2 children with the Theranos founder, Elizabeth Holmes, who, by the way, is in prison for fraud. She lied about
a lot of fraud.
Yeah, like there's a ton of fraud here. She defrauded a lot of people.
She frauded hard.
There's been a Netflix series about it. Who
there was
made
a
the series
Hulu
about it?
series. There was a Netflix documentary. There was a book. The guy who did the book, who basically broke the story, we had on the show like right as it was happening. I forget who it was. It was a reporter from the Wall Street Journal, I think.
So in the most brazen attempt at fundraising since, is it Billy McFarland, the Fire Festival guy?
Yes.
Billy Evans, who has 2 children with Miss Holmes, is trying to raise money for a new company that describes itself as the future of diagnostics and a radically new approach to health testing. And if anyone gives this guy any money, then you deserve to lose every penny.
The good news is that the company is named Haemanthus, Haemanthus, which is just rolls right off the tongue. So, like, clearly, starting off well there. But, yeah, I just don't understand.
Anyone that's associated with Elizabeth Holmes can never work in fundraising or blood testing or really any sort of healthcare diagnostics ever again.
I just don't understand how one can think this is a good idea.
So Mr. Evans, by the way, is the 33-year-old heir to a California hotel fortune.
Oh, sure.
He met Miss Holmes while federal authorities were investigating her. And I have no idea, guys.
According to the company's marketing materials and patent, the Haemanthus device will use a laser to scan blood, saliva, or urine from pets and analyze the samples on a molecular level. In a matter of seconds, the marketing material said Mr. Evans' machine would be able to identify and qualify biomarkers such as glucose and hormones and deploy what the company calls deep learning models to detect cancer and infections.
I really doubt it.
lasers.
Oh, boy.
So, look, don't know anything about the device. All I know is if you are in a relationship with someone who has been convicted of perpetuating fraud in the medical device testing space, you're going to have a really high hurdle to jump over in order to get anyone interested in your medical device that does blood testing and saliva testing.
Can you imagine the conversations that had to happen for this man to get to the point where he is actually appearing in this? Like, nobody was like, hey, maybe you should just sell the patent to somebody else and let somebody... The fact that he is the one that's doing all this means that the patent is useless and it's probably a fraud.
The long-term goal is...
If it was legitimate, somebody would have bought it.
...is to develop a stamp-size wearable version of the product for humans...
that constantly tests my blood?
Quote, based on our experience and partner input, it will require 3 years and $70 million. So that's it. That's it, and we can totally change all the stuff that Amazon's been working on and Apple's been working on for, wearable glucose monitor and this. No, this is going to do. All you got to do is give this guy $70 million and wait 3 years, and they're going to be able to do it.
I have my doubts, but,
The last sentence of this is honestly the best one. The investor presentation makes no mention of Mr. Evans' connection to Miss Holmes.
Well, no kidding.
Gosh, wonder why.
I guess it'd be wilder if it did.
I want to talk a little bit about Kendrick Lamar, because Tucker just let me know that Kendrick Lamar is playing Gillette Stadium tonight. And so Gillette Stadium is big. It holds about 65,000 people on a good day. When Taylor Swift played there 2 years ago, it held that many people for, was it 2 nights or 3 nights?
It was 3.
I think it was 3 nights. And the cheapest that you could get in the door was like $1,000. So Kendrick Lamar is no Taylor Swift, obviously. There's no one in the entertainment world that is these days.
No.
But here's what is interesting, is to get onto the field at Gillette Stadium right now for tonight's show. Granted, it's a Monday in May, the day after Mother's Day, so your mileage may vary on this. $223 to get on the field at Gillette Stadium for Kendrick Lamar, who I will say is just the biggest name in hip-hop today.
Yeah, he just did the Super Bowl halftime show.
Played the Super Bowl.
Yep. Why are we talking about this on Monday night in May?
So, Taylor Swift, it didn't matter what night it was in May. Okay? It could have been Mother's Day, and she was selling that place out.
Yeah.
Why I'm talking about this is trying to figure out what it means. Is this a just, hey, it's a Monday in May thing that's going on? Is it a just, the relative audience sizes between the two are just so different that this is what you get situation? Or is there something that's happening in the broader concert space that could be going on? And to that, ladies and gentlemen, I bring you to someone by the name of Beyonce, who I assume everybody knows, because if you can go by one name, everybody knows you. Beyonce is playing playing MetLife Stadium 3 nights coming up later in May. Beyonce, and again, this is not even day of. Remember, ticket prices go down as you get closer. I can get onto the field for Beyonce in May 22nd, which is a Thursday. I can get on the field at MetLife for under $600 right now. And probably by the time tickets are, we go 2 more weeks out, probably able to get on the field for somewhere in the $300 to $400 range, which I'm not saying is like a good investment or whatever. I'm just saying there's something changing in the concert space, because Kendrick Lamar on a Monday after Mother's Day, I can look at and say, whatever. Beyonce on a Thursday and Friday.
Heading into Memorial Day weekend
in New York freaking City.
That's surprising.
That's kind of interesting to me. So maybe something's happening in the concert space, and I don't know what to make of it, but I got a little bit of noise there. So we'll see. Let's take a quick break for the next 24 hours. And when we come back tomorrow, we'll be talking about more stock and economic stuff.
I'm going to be talking about Waymo tomorrow. Surprise.
That sounds fun, too. We'll see you tomorrow on the Financial Exchange.